Okay, everybody, here we go. It is me, all of you. Thank you for being here. I appreciate it so much, honestly. So, this is my post market wrap up on this Monday, June 5th, 2023. I really don't even know where to start. Let's talk about this freak show of a stock market. So, stocks did fall under pressure today. Nothing major, but falling nonetheless. I mean, earlier today when I did my pre-market report, it looked to me, and I talked about this in the video pre-market, that there was a little bit of a fear trade going on. You had this knee jerk into the dollar, which reversed, by the way. The Dixie, or the relative strength of the dollar, actually finished lower by a fraction. There was a sell-off, and there is a sell-off here going on in the bond market. Although the 10-year yield did stabilize a little here today, the MMRI, Mannarino Market Risk Indicator, did come down a little bit. Okay, let's see where this goes. You want me to lick some coins? People are crazy. Anyway, so yes, that's the story with stocks. This bond market time bomb. It's insane. And the dollar, cryptos got hit pretty good across the board. Okay, whatever. Nothing we haven't seen before. Gold and silver finished mixed. Gold had a gain, silver finished lower, despite the fact that the dollar reversed and finished about flat. Crude oil catching the bid here. Natural gas putting on like 3.8% today, doing pretty good. Again, look, for the long run, thanks, Joey Sox. I wasn't sure where it was. 239 from 242 this morning, I believe it was. Anyway, commodities, crude, natural gas, this is where to go, where to be. No doubt about it. Gain exposure to these things. I've posted, I don't know how many times so far in my newsletter, free to everybody. Link in the description of this video. A whole set of exchange traded funds, which would give you exposure to commodities moving forward. I think it's the place to be, honestly. Some of these actually pay dividends. So look at these things. Yeah, the SEC going after Binance. That's what hit cryptos today. But, look, the more that these so-called authority figures don't want me exposed to cryptos, the more exposure I want. Does that make sense to you? It should here. There are so few people today really that hold any kind of crypto at all. And that tells me as well that I should be holding it here. I mean, the market cap of cryptocurrencies has gotten decimated here, about half of one Dow component, the entire market cap of crypto. Well, that tells me that's where I should be too. Honestly, I haven't bought any more in a long time, but I own a bunch of them at this point, just a couple of thousand in each. Nothing major here going on. Anyway, yeah, crypto's on sale. I believe that's true. Look, you're all entitled to your own opinion, and the more people tell me they hate it, how much they hate it, the more I like it. I don't know. Can I tell you? That's how I feel about this whole thing here. So let's talk about the economic front. So core factory orders fall. Well, that's no surprise. We don't make anything. Factories are, what are they calling this? A manufacturing / factory recession. Oh, it's a factory recession. Oh, lovely and fantastic. Yeah, that's, look, you know this already. United States has become an import nation henceforth. Why? You got the trade deficit out of control and going to get worse here. But this is kind of interesting. A couple of things going on here. So you and I, okay, are clear on a couple of things. And we called this, you and I, before anybody else. This issue with the regional banks, the whole banking sector here, over 9 months ago now, 10 months ago. No deposits, no loans, no deals. And now it's come to light quite obviously. And this is something people have known about for a long time. Derivative exposure. I talked about it just recently yesterday, as a matter of fact. With regard to these institutions, it's beyond belief. It's beyond anyone's wildest imaginations that Goldman Sachs, JP Morgan, and Citi, just these three mega banks, have over $150 trillion worth of derivative exposure. I want you to think about that. Okay. Now, it's coming to light here, and this may happen, and this actually could be a good thing. So I want you to pay attention to this. So we understand this, the debt market itself is a time bomb. It's going to go off. It's unstable. That's why you're seeing all these gyrations here in the bond market, the 10-year yield all over the place, the entire yield curve inverted, pointing clearly towards a super depression, which is coming for everyone. It's here now for a lot of people that are losing their jobs, corporate layoffs. You're hearing more and more of these mega corporations laying off thousands of people. If you just got laid off and you can barely make ends meet, that would be the start of your own personal depression here. I mean, people are done. They're buried beyond their eyeballs with credit card debt, household debt, personal debt. You got loan defaults. I mean, skyrocketing more so than the so-called Great Recession. Okay, but everything is fine. You know how everything is fine? I was watching CNBC just towards the end of the day here, and they floated out this guy. Oh, the economy is strong. The economy is strong because our president says so too. And I believe everything that our loving, caring, mummified, zombified president says. Don't you? I mean, honestly. Anyway, going back to the banks real quick here. It looks like they're going to be forced, okay, to raise their capital reserve requirements. Now, right now, they're at zero. They have a no capital reserve requirement. Now, if the banks have to raise their capital requirements above zero, that would give us, I think, a big tell that there's a problem here. Okay. Why is it? Let me ask you. We're friends, right? You and I, we talk all the time. In your opinion, and I promise to read the comments, why is it that, let's say, a congressional committee hasn't questioned the Federal Reserve or the big banks as to why there is a zero capital reserve requirement right now, especially in the face of what is there's no words for this. The amount of derivative exposure by these institutions, it's like trading naked. You know what I mean? And I don't mean with no clothes. For my lions out here, you know exactly what I'm talking about here. And of course, when this whole thing explodes, they're going to make you pay for it. This is why you're seeing massive capital outflows from these institutions. Is all derivative exposure bad? Okay, all is a pretty broad term here. So I would say no, not all derivative exposure is bad. It's a good question here. But let me explain this to you. With regard to what we're talking about in these mega institutions with the amount on their books, it is all bad because there's no way they can withstand any kind of a hit to this because these are leveraged bets. Derivatives are leveraged, and who knows how much they are leveraged. Could be 100 times, could be 1,000 times. We don't know. But anyway, in your opinion, why is it sincerely that the Federal Reserve, a Fed chairperson, the Fed president, has not been questioned, or even any of the big wigs, the CEOs, Jamie Dimon of JP? Why is it that they're not being? Nobody is asking these things. Why? None of our so-called loving, caring politicians are asking these institutions. Why is it that they have a zero capital reserve requirement? How many of you believe that our so-called loving, caring politicians even know that these major institutions have the exposure to derivatives that they do? They don't even care. Again, our politicians don't work for you. They don't work for me. They work for the Federal Reserve. They work for the military-industrial complex, the corporate agenda. Why do you think they don't? There's nothing. There's no sound at all coming out of the mouth of these things about how these institutions, the mega banks, any institution now limiting the availability of credit to small businesses. They want them shut down. Okay, our politicians want them gone. Period. It's all, again, to fulfill the corporate agenda. You know that. I mean, it should be in your freaking face. No accountability. Exactly. I love this stuff. You guys and girls are the smartest. Magic Mika, thank you. Lord Humongous, you're here. Where's Lava Girl? Is Lava Girl here? Anyway. Blockchain, crypto, everyone's here. Oh, my lovely friends. Anyway, so I want to hear your take on that. So with regard to the outflows here, okay, I covered this last week. We're seeing a phenomenon occur, okay? The biggest outflows from the banks in over 4 decades, and it's not stopping. It doesn't seem that there's an end here. Why is it? And maybe some of you are those who are pulling your cash out. Why is it that you believe this is the best question? Okay, I want to know why. What's in your head? Why do you think that these people are pulling their cash out of these institutions? What do they know? Okay, because this is how secrets work. Nobody knows until everybody knows. You understand? So it seems, yeah, they do consider us serfs. It seems to me like people aren't as stupid as they think they are. And because of these massive capital outflows, again, these institutions might be forced to now raise their capital reserve requirements. Now, raising the capital reserve requirements, you all know what I'm about to tell you. I think so, at least. This would actually help inflation. Okay, from the get-go, you've known this. Raising rates has done nothing. Inflation is continuing to rise and rise and rise and rise. Nobody, not a single mainstream media outlet till this day, has spoken about what you and I know already. We've spoken about, I don't know how many times, countless times. If the major banks were forced to raise their capital requirements, even just a little bit, because they're at zero now, that would contract the money supply and that would bring inflation down. I mean, this is economics 101, people. No, you're not dumb, Jeff. You are not pretty damn dumb. If you're sitting here listening to this with this amazing group of people here, I can promise you that you're not dumb. Although I really would like some more thumbs up here, people. Okay, I got 1,200 people here. You're trying to tell me we can't do better than 394 thumbs up? Feudalism, yeah, or pugilism. Yeah, I think that I'd like to get some of our so-called authority figures, just smack them once, just one good smack. What do you think? Ooh, I would love that. Anyway, the last thing I wanted to speak to you all about, and then we'll go over some questions here real quick. Don't even say that, Lord Humongous, please. I love you. You know that. But if Jamie Dimon runs for president, we're dead anyway, but we're even more dead. Anyway, speaking about mega banks here. So Morgan Stanley has been the most vocal, I would have to say, and those of you who have been with me would probably agree, in warning that something's going to happen in the market, blah, 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 blah. So Morgan Stanley today is saying that they see their little crystal ball is they see a 16% drop in the stock market. And do you know why? This makes sense to me. Although 16% is nothing. But anyway, because we're in for, what are they calling it here? An earnings shock. Again, people are strapped. They're done, all right? But you also have to understand that these institutions, all of them, Apple, they have a main line here, the military-industrial complex. They're going to get all the capital that they need. Again, we're in a transitionary period. The transitionary period is from what used to be, again, the backbone of this nation, small businesses who are being wiped out by the Federal Reserve by design, in collusion with the entire military-industrial complex as well, to fulfill that corporate agenda, to bring these mega corporations up to the top of that pyramid. You understand? So they must erase small businesses. They must crush the consumer. They must crush the economy. And things like this debt ceiling is going to go on and on and on and inflating. Tell me again, because I forgot. Maybe one of you can enlighten me. What's the Achilles heel of a central bank? Any of them? Well, it's their ability to inflate. If you take that away, they die. Thank you, Mitch. Okay. Obviously, with this promise now to borrow trillions and trillions and trillions of dollars more, the Federal Reserve, they're all spraying their shorts and panties all over the place. You understand what I'm saying here? That's what they do. You want to kill a central bank, you prevent them from issuing $1 single of debt. You all know that here. We really could have done something. See, honest to God, really, if we would have had a default on the debt, and then we had some follow through of a revolution or a revolt, we could have taken down these institutions, but they're too powerful. They won't go down without taking a lot of us with them. again, here in the United States, the U.S. military is mandated to protect the Federal Reserve. You know that, right? How does that work? Because of the petrodollar. Okay, they will call in the U.S. military to defend against all enemies, foreign and domestic. Yes, I took that oath too. Most of you know here realize or know that I was an officer in the United States Navy. Yeah, I took that oath, but at that time I didn't realize as well that I had to pledge my life to defend the petrodollar or the Federal Reserve. If I would have known that, do you think I would have done what I did? I don't know. I don't think I would have, honestly. All right. Anyway, so a lot of stuff going on here. We discussed a lot, and I do want to hear from you. I'm not even going to repeat some of these things. I tell you, yelling about Janet Yellen. Janet Yellen, really? She has a nice legs. Do you fantasize about Janet Yellen? I think you need to up your medication here. I know this is just a joke here, honestly, but anyway, people, that's it, man. What else do you guys want to talk about before we go? This video is getting kind of long. Thanks again, Mitch. What do I believe with regard to cryptocurrencies? People, you know my take on cryptocurrencies. I'm not going to change my stance on this. All right, it's not going to change. How I see this, and you might have a completely different perspective, and you're allowed to have your own. Let's talk about, again, the movement of cash through the markets, how it works. It moves in relatively predictable patterns. When you have this kind of a situation here, where we have had rate suppression, bond yield suppression now going on for over a decade, what does it do? It opens up a doorway for cash to flow into risk assets. It reinflates the stock market bubble. It reinflates a real estate bubble. Clearly, that's what we have now. Malinvestment, meaning cash going into things it shouldn't be going into and coming out of things it should not be coming out of. That's clear. All right. Now, eventually, this hyper bubble in debt, which is a monster. Okay, you've heard me say this a million times. It's a monster. Thank you, Alan. I appreciate that. Yeah, we did take an oath to uphold the Constitution, but you know what? It doesn't seem to work anymore. It's just crazy. This whole thing has been perverted into some twisted thing. Anyway, going back to the market here. So eventually, because we do realize that every asset derives value from action in the debt market, everything else can be considered a derivative, especially the stock market, especially real estate. Okay. A meltdown in the debt market is going to cause cash to leave the debt market, put pressure on stocks will sell off. It'll destroy real estate value, in my opinion, as well, because they're in a hyper bubble. And cash is just going to move into commodities, going to move into cryptos, I believe. I really believe that. And again, you're allowed to have a different opinion on this. But cash just looks for places to go when things fall or when cash, when there's fear in the market. But this is going to be unlike anything we've ever seen. Again, we have a monster engulfing the earth right now. That is this hyper bubble in debt that's going to keep getting inflated until it doesn't. But again, this is all a big plan that's been put into effect here. They're trying to create a new feudal system. Joey Sox, thank you. Long JEPI, yes. Joey, you know that. Anyway, hold that thought real quick. But they are right in the heart of creating a new feudal system. What this is really all about? Raising rates, pressuring the middle class, wiping out small businesses here, making people subservient or dependent on the system. Coco's getting walked. But anyway, going back to JEPI, I told you this already. I own a lot of JEPI. I've been long this market for a long time. All right, net long. I'm not going to sell this stuff. I'll sell JEPI when they cut the dividend. All right. If that happens, I will look to add to that. I like the monthly income. I like it. It just makes me happy to have. You understand? Thank you, Peter, as well. Anyway, look, we're not going to change anything that we're doing. They want to pressure gold and silver in a global environment of exploding debt right now. You got to be on the opposite side of this, people. I don't know another way to put it. The best way on this planet that I can think of, and I'm open to other suggestions. I am open to any suggestion you people want to give me because you're all really, really smart. Honestly, it's the truth. All right. I believe in my heart of hearts, and I've been saying this for over 10 years, the best way to take the opposite side of the trade or to bet against the hyper bubble in debt is to hold units of wealth. Mitch, thanks again. You got it. Units of wealth being gold and especially silver. I love gold. I love platinum and palladium as well. Someone was saying, I don't mention this enough, but I love these things here. These have been gold and silver are real money. Platinum and palladium have also been real money too. But silver, in my view, remains the most undervalued asset in the world. In the world, bar none. How does Greg come up with that? You know what I'm going to tell you. Gold silver ratio. Excuse me. I'm sorry. Dow gold ratio, gold silver ratio, copper too. Yes, you should hold copper. All this stuff. You all know that. Commodities. How many times has this guy said commodities, commodities, commodities? Because again, that's what's going to happen. Debt market sell off, pressure on stocks, cash doesn't grow little money wings and fly away. It just is going to move. It's going to move into commodities. So that's just how I see it, people. Look, I'm an open book. I tell all of you what I'm doing, why I'm doing it, how I'm doing it, right or wrong. All right. I mean, definitely not right all the time. Nobody is. No one can possibly be right all the time. Human beings are not infallible. But I'd like to say one of my strengths is I'm straight with every one of you. I tell you what I'm doing, why I'm doing it, what I believe. And you don't have to agree with me on it, on this stuff. And I welcome arguments to the other side. Understand? Anyway, this video is getting kind of long. So I'm going to I'm going to stop now. Beans, bullets, and booze. You know what? You can't go wrong. You can't go wrong. But with that too, people, especially in the fact that I just lost a good friend of mine here, and it hurts so bad. It's terrible. I couldn't think straight. I still can't think straight. It's very difficult to think that you'll never see this person again. You'll never hear their voice. You'll never talk to them again. It's just very difficult when it's so unexpected. Like when someone is ill, let's say elderly and ill, like Ed Hall was, the Pearl Harbor survivor we used to take care of. We knew he was 99 years old and he was very sick. We knew the end was going to come. But when you have someone that just has a sudden death, you know what I'm talking about here? It's a whole different ball game. So remember what I've been telling you as of late. Don't feel ashamed to tell someone that you love them or anything like that. I've been telling everybody I love them lately, especially because of Josh passing. I wish I would have had that opportunity. And I love all you guys, Mitch included, and Magic Mika, Lord Humongous, Joey Sox, everybody, all of you guys and girls here. We're a big family. We're a big family. I do believe that, yes, I do believe that's the case. Unfortunately, we don't know what actually happened here. But anyway, all right, people, I'm gonna get going. Thank you, Magic Mika. Thank you, all of you. I can't tell you how much I appreciate all of you, your support. Those thumbs up are so valuable. Your love, your prayers, they have helped. I really do believe in the power of prayer, honestly. And I was kind of wrecked over this whole thing with Josh. And I know a lot of you are out there, you're praying for me and going to get through this stuff. And it does help. I mean, it's hard. It still is hard. And if I think about it too much, I'm going to get misty here. And I don't want to do that in front of everybody again. I'm a sensitive guy. Little things kind of set me off. All right, look, I'm going to get going here. Look, my eyes are getting all messed up. I'll see you all in the morning. Please comment. Let me know what you think about the stuff we covered here. Honestly, I want to hear from you. I read the comments. I promise on that. And I'll see you all in the morning. We'll sum this up. And of course, for the live stream tomorrow. All right. Take care, everybody.